Welcome to our comprehensive guide on cryptocurrency and blockchain. If you're curious about the digital currency revolution, you've come to the right place. Today, we'll break down everything you need to know about these exciting technologies in simple, easy-to-understand terms. Let's dive in. First things first, what exactly is cryptocurrency? Imagine a type of money that exists only in digital form, secured by cryptography. Unlike traditional currencies like the US dollar or euro, which are issued by governments, cryptocurrencies are decentralized. This means they operate without a central authority like a bank or government. Some of the most popular cryptocurrencies include Bitcoin, Ethereum, Ripple, Litecoin, and Tether. Bitcoin, created by an unknown person or group known as Satoshi Nakamoto in 2008, was the first cryptocurrency. Ethereum, launched in 2015, introduced smart contracts, allowing developers to build decentralized applications on its platform. Ripple focuses on real-time, cross-border payment systems, while Litecoin is known for faster transaction times. Tether is a stable coin, pegged to traditional currencies like the US dollar to maintain a stable value. Now, let's talk about the technology behind cryptocurrencies, blockchain. Think of blockchain as a digital ledger, a database shared across a network of computers. Unlike traditional databases managed by a central authority, blockchain is decentralized. Here's how it works: data is stored in blocks, and these blocks are linked together in chronological order, forming a chain. Each block contains a list of transactions. Once a block is added to the chain, it cannot be changed or deleted, ensuring data integrity. This process is secured through cryptographic techniques, making blockchain highly secure and transparent. Why have cryptocurrencies gained so much popularity? There are several reasons. First, decentralization. People like the idea of a currency that is not controlled by any central authority. Second, security. Cryptocurrencies offer a high level of security through cryptographic techniques. Third, transparency. Blockchain technology provides a transparent record of transactions. Cryptocurrencies are also highly accessible. Anyone with an internet connection can use them, making them inclusive. Additionally, the potential for high returns has attracted many investors. Early adopters of Bitcoin, for example, have seen incredible returns on their investments. Thinking about investing in cryptocurrencies? Here are some steps to get you started. First, research. Before investing, understand the basics of cryptocurrencies and the market. Websites like CoinMarketCap provide detailed information about different cryptocurrencies. Second, choose a reliable exchange. Platforms like Coinbase, Binance, and Kraken are popular choices for buying and selling cryptocurrencies. Third, secure your investment. Use hardware wallets like Ledger or Trezor to store your cryptocurrencies securely. Fourth, diversify your investments. Don't put all your money into one cryptocurrency. Spread your investments to reduce risk. And finally, stay informed. The cryptocurrency market is highly volatile. Stay updated with the latest news and trends. While the potential for high returns is enticing, it's important to be aware of the risks. Cryptocurrencies are known for their volatility. Prices can fluctuate wildly in short periods. Regulatory risks are also a concern, as governments around the world are still figuring out how to regulate cryptocurrencies. Additionally, while the blockchain itself is secure, exchanges and wallets can be hacked, posing security risks. Market manipulation is another risk. Large holders, known as whales, can influence prices significantly. It's crucial to be aware of these risks and invest wisely. Cryptocurrency and blockchain technology have applications beyond just digital currencies. In the financial sector, blockchain is used for secure and transparent transactions. In supply chain management, blockchain provides a transparent and unchangeable record of transactions, helping track the origin and journey of goods. In healthcare, blockchain can securely store and share patient records, ensuring privacy and accuracy. Voting systems can also benefit from blockchain technology, creating tamper-proof voting systems and ensuring fair elections. Ethereum's blockchain allows for smart contracts, self-executing contracts where the terms of the agreement are directly written into code. Ready to get started with cryptocurrencies? Here's what you need to do. First, educate yourself. Learn about different cryptocurrencies and their uses. YouTube channels like Andre Jik and Financial Education offer excellent resources for beginners. Second, set up a wallet. Before buying cryptocurrencies, set up a digital wallet to store them. There are software wallets like Exodus and hardware wallets like Ledger. Third, choose an exchange. Sign up on a cryptocurrency exchange to buy your first cryptocurrencies. Coinbase is user-friendly for beginners. Fourth, buy and trade. Start with small amounts. Observe how the market works and gradually increase your investment as you become more comfortable. And fifth, stay secure. Use two-factor authentication and store your assets in a secure wallet. Let's go over some common terms in the cryptocurrency world. Altcoin refers to any cryptocurrency other than Bitcoin. Mining is the process of validating transactions and adding them to the blockchain. A wallet is a digital tool to store and manage cryptocurrencies. The private key is a secret key that allows you to access and manage your cryptocurrency, while the public key is a public address to receive cryptocurrency. An ICO, or initial coin offering, is a fundraising method where new cryptocurrencies are sold to investors. Understanding these terms will help you navigate the cryptocurrency world more effectively. The future of cryptocurrency and blockchain is promising but uncertain. We can expect increased adoption as more businesses and individuals start using cryptocurrencies for transactions. Regulatory clarity is also on the horizon as governments work on regulations to make the cryptocurrency market safer for investors. Technological advances will make blockchain faster and more scalable. We may also see greater integration of cryptocurrencies with traditional financial systems, making transactions smoother and more efficient. Cryptocurrency and blockchain technology represent a revolutionary shift in how we think about money and transactions. By understanding the basics and staying informed about market trends, you can navigate this exciting new landscape with confidence. Whether you're looking to invest, use cryptocurrencies for transactions, or simply learn more about the technology, the world of cryptocurrency offers endless opportunities for exploration and growth. Thanks for watching, and don't forget to like, share, and subscribe for more insightful content.